Is the LA real estate market slowing like the national market? It's the biggest question I'm getting right now, especially after we saw prices for both houses and condos in LA County dip last month. The answer is complicated though, because the data is telling two completely different stories. In this video, we're gonna break it all down. We'll show you why the market for condos is softening, but why single family homes are still a seller's game. And most importantly, I'll show you exactly which neighborhoods are seeing the biggest slowdown, creating opportunities for deals, and which are still hot enough to have bidding wars. If you're new here, my name is Tony and I make videos about LA real estate. I'm also a real estate broker with over $110 million sold. With that, let's get into the numbers. To get started, let's set the stage with the single biggest factor affecting real estate: mortgage interest rates. Here are the rates from the last 5 years. On the left, you can see those historic lows in 2021, where rates hovered around 2.67%. Starting in 2022, we saw a rapid climb that continued late into 2023, when rates peaked at nearly 7.8%. That period of sharp increases created a lot of uncertainty and sidelined many would-be buyers. However, if you look at the most recent activity on the far right, you'll notice that the dramatic weekly swings have calmed down. Rates have settled, and as of today, the interest rate for a 30-year mortgage averages 6.63%. This stability is significant for sellers. When rates are predictable, buyers can plan, they can get pre-approved with confidence and make offers without the fear of rates jumping unexpectedly before they lock. A stable environment, even at higher rates, creates a more reliable and committed buyer pool. So that's the national picture, but how this plays out street by street in Los Angeles is fascinating, because the story for a single-family residence buyer is completely different than it is for a condo buyer right now, and we'll start with single-family homes data next. But before we jump into those SFR numbers, I want to give a quick shout out to a viewer who suggested separating single-family residences from condos, which is exactly what we'll do. We'll do single-family homes first, then condos. So let me know what you think of this format, and while I have to keep the channel focused on LA County, I'd love to hear what other vectors we can take on the data that might be helpful to you. So leave a comment in the notes below. All right, let's dive into the single-family home market in LA County. We'll start with active listing inventory. This is simply the total number of homes for sale in a given month. It's the most basic measure of supply and tells you how much competition you have as a seller. This chart tracks our inventory over the last 5 years. The blue circles in the chart show July of each year, and I like to add circles in my slides because it makes it easier to see the past months on a year-over-year basis and kind of eliminates the shock of seeing a chart with these seasonal fluctuations, which are completely normal. So looking back to the far left in July of 2020, there were about 12,100 homes on the market. And then from there, you can see how inventory plummeted, hitting extreme lows in late 2021 and early 2022 during the pandemic buying frenzy. Since those record lows, we've seen a gradual and somewhat seasonal climb back up. Now looking to the far right, we end up in July 2025 with 10,836 active properties. For sellers, this level of inventory means your property will stand out with a little less competition. For buyers, it signals that the market is still competitive, making it crucial to be prepared and decisive when you find the right home. Overall, it means that high-quality, well-priced listings will continue to get significant attention and move relatively quickly. Now let's look at one of the most important metrics for understanding the market's pace: months supply of inventory. This number answers the question, if no new homes came on the market, how long would it take to sell every available home at the current rate of sales? Think of it as a speedometer for the market. Generally, anything under 5 months is considered a seller's market, which we'll talk about in just a second. This chart tracks the supply of inventory for single-family homes over the last 5 years. If you look back to July of 2020, we had just over 2 months of supply. Following that, it dipped even to more extreme lows in 2021. Since then, the market has been gradually adding inventory, giving buyers more options. As of today, our supply of inventory stands at 3.5 months, 3.49 to be precise. While that's up almost 11% from this time last year, it did dip by about 3% last month, showing a recent tightening. Here's why this matters. At 3.5 months, we are still firmly in a seller's market. For sellers, this confirms that demand from buyers is outpacing the current supply of homes, bolstering your negotiating position. For buyers, this number reinforces the competitive nature of the market. Although it's slightly less frenzied than a year ago, you still need to be prepared to act decisively when a good property hits the market. To put that number into a simple visual context, this slide shows us exactly where the market stands. As you can see, with a month's supply of inventory at 3.5, the needle is pointed squarely in the seller's market territory. This is a clear, at-a-glance confirmation of what the data tells us. It's a competitive market. For sellers, this visualizes your current advantage. For buyers, it's a straightforward look at the competitive pressure, and it confirms that the supply of homes is not enough to meet the current demand from buyers. Now let's look at the speed of the market, which we measure using median days on market, or DOM. This is the midpoint for how long it takes a home to go into escrow. Half of the homes sell faster than this number, and half take longer. A low DOM signals a fast-moving market. This chart shows us days on market for single-family homes over the last 5 years. On the far left, in July of 2020, the median time on the market was 18 days. The market accelerated even more after that, as you can see from the deep troughs in 2021. We can also see a clear seasonal pattern where the market slows each winter, with the DOM peaking above 30 in early 2023. The pace has since recovered significantly. Today, the median days on market is 20 days. That's a slight increase of 5.3% from last month, which is a typical seasonal adjustment as we move past the spring market. This matters because 20 days is historically very fast. For sellers, it means you can anticipate being in escrow for about 3 weeks, provided your home is priced and marketed effectively. For buyers, it's a direct indicator that you need to be ready to move quickly. Now for the metric everyone watches, the median sold price of homes. This is the price right in the middle of all homes that sold, half sold for more, half sold for less. It's the most accurate way to gauge price trends. This chart shows the incredible journey of home prices over the last 5 years. If we look at the far left, the median price in July 2020 was $745,000. From there, prices began a steep and steady climb, with only a brief pause in early 2023 before resuming their upward march. That brings us to today. In July 2025, the median sold price for a single-family home in LA County was $1,015,000. Here's why this matters. Reaching a median price of over $1 million is a huge milestone. For sellers, this represents a massive growth in home equity over the last 5 years. However, it's crucial to note that the price is down 4.7% from last month, which suggests that overpricing is more hazardous than ever. For buyers, this number confirms the significant affordability challenges in our market. At the same time, this recent dip could be a sign that prices are hitting a ceiling, potentially signaling a slight shift in the market dynamic. This is something we'll keep an eye on for sure. By the way, if you want to know your home's value, I've linked to an instant valuation tool in the show notes below, so you can see what your home is worth right now. It's super fast. It only takes a few seconds to see your home's estimated value. Then my partner Beata or I will reach out to you to say hi, to see how you're doing, and see if there's anything we can help you with your journey, whether it's to sell or just pull out equity. Our final metric for single-family homes is the sold to list price ratio. This simply compares the final sales price to the listing price. A ratio over 100% means bidding wars are common, while under 100% suggests buyers have a little bit more negotiating power. If we look at the chart, we can trace the wild ride the market has been on. Things were already hot in July of 2020, with the average home selling for 100.1% of its list price. This trend accelerated and hit an absolute peak in April of 2022, with an average of over 106.3% over the asking price. This was the height of the market frenzy. And then as interest rates rose, the ratio cooled significantly, bottoming out in January 2023 at 98.5%, a time when buyers could typically get a discount. Now, we've recovered from that low point and the market has found its balance. Today, the sold to list price is 100.1%, same as July 2020. So we've come full circle. Here's why this matters to the market. A ratio of 100% signals a rational, efficient market. For sellers, it means that pricing your home correctly is the key to success. The market is supporting accurate prices, and there's little room for overpricing. For buyers, that means that while widespread bidding wars have subsided, you should still expect to pay the asking price for a well-priced home. The days of deep discounts are largely over. By the way, if you're finding this helpful, hit subscribe. My mission with this channel is to help you understand the LA market and make smart moves, whether you're selling, buying, or investing. So follow along if you'd like. That's the picture for the single-family home market. Now let's switch gears. Now let's see how these same trends are playing out in the market for condos, townhomes, and lofts, aka attached properties. We'll start with the active inventory, which is the total number of units for sale. Looking at the chart, we can see a similar seasonal pattern that we saw with the single-family homes, Back in July of 2020, there were about 4,400 condos and townhomes on the market. After dropping to lows in early 2022, that number has been on a gradual rise. And today we have 4,839 active listings in this category. This is a key difference from the single family market. Unlike houses, the condo inventory today is actually higher than it was 5 years ago. So for sellers, this means the competition is a little stiffer now than it was in 2020. And for buyers, this is good news. There's more properties to choose from and potentially a little more leverage than you would have in the single family home market. Now let's check the months of supply of inventory for condos and townhomes. Here we see a similar trend to single family homes, but the numbers show a slightly different story. The supply has been climbing steadily since the market lows. Today, the month supply of inventory for this segment is 4.61 months. While that's down about 3% from last month, it's up by a massive 31.7% compared to this time last year. This is a critical distinction from the single family market, which sits at only 3.5 months of supply. At 4.61 months, the condo market is approaching a balanced market. For sellers, this means your negotiating power is a little bit less pronounced than it is for single family homes. For buyers, this is great news. A market with nearly 5 months of inventory gives you more options and more time to make a decision and more potential negotiating room. To put that number into perspective, let's look at our market type indicator. With a month supply of inventory at 4.61, you can see the needle is just hanging on in the seller's market zone. This visual makes it easier to see the difference between the single family home market and the condo market. It makes it crystal clear. While single family homes were deep into the seller's territory, the condo market is tilting very close to a balanced market. For both buyers and sellers, this confirms that the playing field is much more level in this segment, giving buyers a stronger position than they have in the single family market. Next, let's look at the speed of the market, or the median days on market. The overall trend here is similar to single family homes, following a clear seasonal pattern. Back in July of 2020, the median DOM was 20 days, and after the usual cycles, we are now finding ourselves with median days on market of 28 days. This is a significant difference from the single family home market, where homes are selling in just 20 days. Condos and townhomes are taking about a full week longer to sell. For sellers, this means planning for a longer marketing period. For buyers, this slower pace is a clear advantage. It gives you more breathing room to tour properties and make a thoughtful decision without the same level of urgency found in prior markets. Now let's look at the median sold price for condos, townhomes, and lofts. Similar to single-family residences, this segment has seen significant price appreciation over the last 5 years. Looking back to July 2020, the median price was $537,000. After a steady climb since then, the median price for sold homes in July of 2025 was $679,000. It's also worth noting that this number is down 1.6% from last month, showing a slight cooling off that mirrors the single-family home market. You can see just a little bit of a cool down right here on that axis. The key takeaway here is affordability. At $679,000, this segment is a much more accessible path to home ownership compared to over $1 million price point for single-family homes. For sellers, this chart still represents healthy growth in your equity. And for buyers, this segment, condos, townhomes, and lofts, remains a vital and more attainable alternative in the Los Angeles market. Our final metric here is the sold to list price ratio, and the story is remarkably similar to what we saw with single family homes. After peaking during the frenzy of April 2022, when condos sold for over 105% of their asking price, the ratio cooled off, bottoming out in January 2023 at 98.7%. Today, after recovering from those swings, the market has found equilibrium. The sold to list price ratio for July 2025 is 99.93%, which is right at the 100% mark. This tells us that both the single-family residence and condo markets have landed in the same rational space. For sellers, it's a powerful reminder that accurate pricing is key to a successful sale, and for buyers, it signals that you should expect to pay the asking price for a desirable property, as there isn't much room for negotiation on a well-priced listing. So we've looked at the big picture for LA County. Now let's get granular and look at which specific neighborhoods were hot and which ones were not. This is my favorite part. This is where we zoom in and we see how different the real estate market can be from one area to the next. In this video, we'll look at what's hot and what's not for the condo, townhome, and loft market, just to keep things fresh. First, let's look at the cold neighborhoods. These are the areas where the market is moving the slowest. To identify them, I've sorted this list by sold rate, and that's the percentage of available listings that actually sold in July. A low sold rate is the clearest sign of a buyer's market. A quick note, I chose areas that had at least 10 transactions minimum to make the list. So here's a sold rate. I've sorted it from the lowest point. So topping our list as the coldest neighborhood is downtown LA. Of the 65 available condo and loft listings, only 16 sold, giving it a sold rate of just 25%. That means only 1 in 4 listings sold. Furthermore, the properties that did sell went for 4% below list price. As you can see, 96% of the list price was achieved. And you can also see that the time on market was 81 days, which is nearly 3 months. You can see a similar story in the rest of this list. So we've got West Hollywood vicinity, 29% sold through, 3% below asking price. Santa Monica, 38%, slightly better, and a slightly better list to price ratio. And then the list to price ratio in Beverly Hills, sagging by 5%, but again, a relatively decent sell-through rate. For buyers, this list is your shopping list for opportunities. These are the neighborhoods where you have the most inventory to choose from, the most time to make a decision, and more negotiating power. For sellers in these areas, the data is sending a very clear message. You are in a true buyer's market. So sellers, get your ducks in a row and get your marketing plan squared away. And I'll just let you know the 2 smartest, easiest things you can do is to get magazine quality listing photos and, of course, price your property competitively to be one of the few that sells. Now let's flip the script and look at the hot neighborhoods, where the market dynamics are the complete opposite. We've identified these hotspots by sorting for the highest sold to list price ratio. So that's this column here. These are the areas where high demand is leading to bidding wars and homes sell for the most over their asking price. Once more, I filtered for areas that had at least 10 transactions minimum to make this list. At the top of our list for July is Alhambra. The average condo or townhome there sold for an impressive 3.6% over its list price, or 103.6%. On top of that, these properties went into escrow in just 21 days, a full week faster than the county median. We see similar heat in Southeast Pasadena, where properties sold for 101.4% over their list price, and in Glendale, south of the 134 freeway, where they sold for 1% over list. This data perfectly illustrates the hyper-local nature of real estate. For sellers in these hot neighborhoods, the market is clearly in your favor. You can expect strong buyer interest and a fast sale, likely for more than your asking price. For buyers, this is where the competition is fierce. You need to have your financing ready, be prepared to act immediately, and you need to make a strong offer, perhaps even above the list price, to be successful. So there you have it. If you're planning to buy or sell in Los Angeles, be sure to reach out. Here's my contact information. You can reach out anytime. If you're thinking about selling, my team and I would love to show you how the market is playing out in your neighborhood and discussing strategies to get top dollar. If you're looking to buy a home, we can help you find the neighborhood that fits your lifestyle at a price point that makes sense. I'm Tony, thanks for watching, and I'll see you in the next video.